All right, so I took a fat gold loss this morning on November 14th at around 8 a.m. on gold. This was a pretty big high conviction trade for me, and I was very excited to hold these up to around the 44.50 mark, past all-time highs. Unfortunately, this did not play out how I expected to, so I wanted to take a second here and explain what my bias was, my market structure, and why I think this did not play out. So first of all, you can see the key levels that I already had marked out on the chart. Some swing highs, some swing lows, some all-time highs that were tested and failed to break above, which I took a beautiful short off if you guys watched my last few videos. So coming into gold around the October 21st mark, we did start making a small range, and I did think after this massive fall off, we would have a continuation to the upside, or at least some kind of recovery. I kind of held my breath on this because if we did not break this area of interest up here, I was expecting that we were going to continue lower. So be it. We did not break this area of interest. We continued to reject off of it and moved lower. Could have been a cheeky place for a gold short for a break and retest of this zone right here and taking it from right here to the downside. This is where I mostly got involved in gold, and I was very, very happy with this trade that I took. We had been ranging on gold from October 27th to me only taking a trade on November 6th. So this is a very clear range that we saw. We saw this trend line from the highs coming down. We continuously rejected off this range. I actually wanted to get involved in this move once we broke this high right here. Unfortunately, we just continued rejecting off this area, and that did make me very uncomfortable to take a trade. And for me, I will never take a position if there is even the slightest bit of doubt. The macro bias did support a position here, which I did take a short-term gold trade, and you guys saw the breakdown. I was up around $8,000 on it, and then gold did what it does best and just completely reversed on me. No harm, no foul. We went break even on it, but it did give me the right macro outlook that I could continue to look for another trade, and I ended up catching a nice 3.4 RR trade. Basically, we react off these swing lows, continue to the upside, form bullish market structure, and my macro bias was rock solid to look at gold longs on here. So I could have held this trade a lot longer, but I did want a fresh macro outlook. And unfortunately, I called this zone right here no man's land, because personally, there is just no structure in here. There is nothing we can really look at. I understand fair value gap traders might be very horny to take some moves off here, but for me, I don't trade off fair value gaps. I don't even know the definition of what a proper fair value gap even is, nor do I care to. For me, this area specifically was a zone I thought we could maybe test, but I just wasn't even comfortable looking at anything here. So I wanted some good market structure to support that. And I thought if we came back into this area, we would just continue back to these highs. So what happened? I ended up taking a break and retest of this zone right here. It was a very, very tested zone from the left right here, which got me very, very interested in it. We broke through with so much momentum as well. And for me, this is a solid trade idea forming based on the market structure. With market structure showing me that I could take some longs off this zone right here. What were the macro conditions? Why? So this was a bit of an anticipation move for me. We just finished the government shutdown. Everybody's back in office from their little vacation. Longest shutdown in history. But what was the key macro event that caused me to look at this? Interest rates, job reports, everything was already on the decline. So for me, that obviously means we're moving into the safe havens, which is obviously gold. And the biggest thing for me with all of this was during the government shutdowns, they're saying that we may have lost data forever. And to me, you could go conspiracy theory on this, and there is a lot of speculation from my end where it's like, how bad were these reports that, we ended up just not even seeing what the job numbers were, what inflation came in at. So with CPI getting moved and the job reports being one of the biggest things for gold, like it's literally rocket fuel, that not being released, I anticipated that gold was going to have a massive move to the upside, and I wanted to position myself accordingly. Well and behold, we had this perfect area of interest popping up, massive break through it, taking the retest entry off on it, and continue to the upside. So unfortunately, that did not play out for me, and we had a huge move to the downside. Very unfortunate, but here's a couple macro events why I think this could have happened. Unpopular to my macro bias, with the government shutdown ending, I do think that with the restart of data flows, the risk of surprise worsening tightened, and the markets began adjusting to the possibility of a stronger economics. Less aggressive easing, higher interest rate expectations. So in short, a relief event reduced part of that tail risk premium that had boosted gold initially from the left. Now, standing on the hawkish comments that reduced the odds of December rate cuts by the Federal Reserve, I do think gold prices did fall because of the official statements that were made about the hawkish remarks that diminished the expectations of a December rate cut. And I think the probability of a 25% basis point cut in December fell from around 64% to an earlier 50%. Because gold's a non-yielding asset, higher real interest rates raise the opportunity cost of holding gold, and it makes it a little bit less attractive. Finally, I know this might not be a very popular opinion, but I do see a good profit taking from these lows right here. This was a massive sell-off on gold, and I'm sure everybody was loading up on gold prices when we were all the way down below 4,000. So in summary, I loved the gold narrative. The shutdown ended. We had, the weak data tail risk that was kind of removed, and the Fed officials are obviously signaling a less likelihood of an imminent cut. So the market flows turned into profit taking, liquidation, and, gold was sold alongside of other assets. We had a huge red day yesterday on all the indices as well the day before. I caught some NASDAQ shorts, which was great. I was very happy with those, but I was hoping this trade played out a lot more because the macro bias and the market structure bias were both, on point with this. Obviously, I was on a hot streak in November, and this is a little bit of but that happens in swing trading. This is, the game. Sometimes you're right, sometimes you're wrong. The majority of the time, if your macro bias is correct, your market structure usually follows with you. But again, no harm, no foul. I would like to see gold start making some more market structure around here and showing me if we're going to continue lower from this point on, or if we are actually going to create some more market structure to the upside and continue back to the highs. I'm going to be keeping a close eye on gold for the next few weeks. I don't really foresee myself taking a trade too soon on this. I would want to see some more market structure form before I kind of commit to a direction and then have that fresh macro outlook. Currently, if we look at indices, we are recovering from that massive sell-off we had. This was the trade I made a breakdown on actually already, and we're having a massive recovery right now. So I just need to see more narrative on both indices and on gold before I really commit to that direction that I want. But that is the breakdown. I hope you guys enjoyed. Everybody loves to see a good loss on the internet. So I hope this gave you guys some insight and you guys learned something from this video. If you did, make sure to leave a like, subscribe, and drop any comments you have in the comment section. See you in the next one.